Good morning. So thank you for making it out to the first set of sessions for day 2 of the Productivity Summit. And here I'm very pleased to, introduce the session on Canada's resource sector. So the idea behind the focus groups that we have on day 2 is that they're going to be on sectors that punch far above their weight in terms of economic impact, investment impact, contributions to economic growth. So resources, of course, very important for this province, but important for all of Canada as well. And one, like the other sectors, faces a lot of unique challenges and opportunities ahead. And so I'm looking forward to exploring those with the panel today. But first, we're going to begin this session with a kind of a scene setter, if you will, some important data on the resource sector to make sure that we're all on the same page to get all that we can out of the panel conversation. And so for that, I'm very pleased to introduce Mark Parsons. Mark is the Vice President and Chief Economist of ATB Financial. And so please welcome Mark Parsons, who will kick us off.
Thanks, Trevor, and great job, honestly, on this conference. It's fantastic. I've been talking about productivity for a long time as an economist, and I can't believe there's a whole conference devoted to the subject. It's fantastic for someone like me. It's been great so far. So I'm going to set the stage and give you a bit of data because we're going to have some experts talk about what's happening in the resource sector and some of the productivity issues. So my focus is really going to be on where I see sort of the productivity levels and growth in various sectors of the broader resource sector. So this is a picture I kind of like to describe productivity, because there's a lot of talk in this conference about, well, it's not about working harder, it's about working smarter. So when I think about the resource sector, it's like, as economists, you think of comparative advantage. What are we really good at? And what are some strengths we can build off of? And so that means, pushing the ball, not the square, choosing the path of least resistance, doing things that we're just inherently good at and getting better and better at that. And we're actually really, really strong in this space. We're one of the largest producers of oil and gas and other products, and we're getting into critical minerals. So this is something Canada's endowed with natural resources, and it's no surprise that we're really, really productive in this space. You've heard this before. I just real fly over, the break the glass speech, but we're about below 70% of U.S. levels on GDP per hour worked, converted into purchasing power parity and all that stuff. So I don't need to dwell on this too much. It's just really setting the stage on how the resource sector fits into that. Digging a little bit deeper is there's a point. I'm not just trying to repeat everything you've heard already, because to understand what's happening in the resource sector, you really have to look at the investment picture, because the resource sector disproportionately contributes to business investment. And if you look at what's happened since 2015, it's really been that slowdown in capital intensity. So business investment, as I'll show soon, is still below where it was in 2014. So a big part of the slowdown in productivity growth has come from business investment, and then some other reasons cited you've heard in this conference is policy, regulatory uncertainty, and scaling issues, internal trade barriers, competitions, taxes. Geography I put in there because it's come up, but I'm not so sure about that because our geography hasn't changed, but our productivity growth definitely has slowed, so I'm not so sure about that one. So really, have to go back. This is a chart showing business investment, non-residential. And the peak was 2014, and since then we've been trending below that. And a big part of that story, it is oil and gas, but it's not all of it, because there's been weakness across a number of sectors on business investment. The panel will talk a little bit more about what's going on there, but if I could point to one thing, the most obvious thing that's happened in the last 10 years is it's really that this business investment is much lower than it was, and at the same time, we've been building a lot of homes in Canada. We've had rapid levels of immigration, so had to respond to that, and it's the non-residential stock of capital in Canada in chain dollars is actually higher than non-res. So just think of it this way: housing is needed, but it's not really a productive asset like a business investment is, and so this is having more housing investment with lower levels of business investment is not really a recipe to improve Canada's labor productivity. So it's really, what we're seeing here is over the last decade that the Canadian economy has been fueled by consumers, residential investment until recently in government spending, and kind of hanging below that has been business investment. So really this does not bode well for labor productivity, but also doesn't bode well for future exports, because if you're not investing today, you're not going to get the exports tomorrow. Some points have been made about why productivity matters, and the reason people should care a lot about productivity is because it's strongly linked to wages. Now, there's a couple ways to show this. One, you can show it over time, that the decline in our productivity performance is also coincided with declines in real wages, or at least slower growth in real wages. Another way to look at this is by industry. So this is all the industries in Canada, not cherry picking here, I'm just plotted them all, a pretty detailed industry classification. And what you can see is oil and gas is near the top, but related, petroleum, manufacturing, pipeline transportation, natural gas distribution, not just oil and gas extraction, but related industry, both upstream and downstream. So high levels of productivity, and as it turns out, higher levels of wages in those sectors. Which is, keep that in mind, because I'm going to circle back to that. In Alberta, I wrote a paper on this over the summer, and I was really interested in finding out why productivity growth has slowed in the province. And in particular, how much is it coming from just weakness across all industries, and how much is it coming from shifts between industries? And on the chart, there's two charts here. One showing that good sector employment, and good sector includes oil and gas, construction and manufacturing, which is in Alberta, manufacturing is in large part an extension of energy because it includes things like petrochemicals. That employment's lower than it was in 2014, and service sector employment has made up the difference and it has grown. And the reason that's important is because there's been an industry shift. There's been shift in labor out of high productivity industries into lower productivity industries, and that's weighed on our productivity growth over the last decade. Some talk recently about, if you're listening to the economists debate productivity numbers, as I do, some talk about the role of the oil and gas sector in something called multi-factor productivity, also called total factor productivity. And that's true that total factor productivity's declined in oil and gas, but what has also happened at the same time is capital intensity has gone way up, so capital per worker. And so those two effects have for the most part, offset each other, and so labor productivity, has grown, not as much, if we look at the last couple decades, but underneath that is declines in multi-factor productivity and huge increases in capital intensity. So I think that's really important to keep in mind, because mostly economists talk about labor productivity, and there's issues around how multi-factor productivity is measured and whether it accounts for resource quality and things like that. Agriculture and forest products are really interesting because they don't have the same level of labor productivity as oil and gas, but they've had really strong growth. And something we don't talk about enough is if we're looking for examples of where we can, is there a sector we can turn to that's really been successful in improving labor productivity? It's agriculture. Agriculture's had tremendous year-over-year gains in labor productivity. Alberta's a bit higher than the national average. And then the same thing for wood product manufacturing. Mills become more efficient and really increase their capital investment. And that's driven improvements in labor productivity. I can't believe how many times I've said labor productivity in this presentation. I'm like, I hope no one's doing a word count. So the question I ask over the summer is, I heard a lot of people talk, it's like, we need to diversify. And I'm like, yeah, we need to diversify, that sounds great. We also need high levels of productivity. That also sounds very good. I like both of those things. Why don't we do both? And the reason you can't just say, well, diversification is like, well, if that means expansion into lower productivity industries, then that can weigh on our overall productivity performance. But we also have to be prepared for the future. We have to grow other industries. That's fine. But we also have to acknowledge that the main reason that Alberta has the highest level of labor productivity in the country is because, well, we're generally more productive across all industries. There's that factor. But in this paper, I found that about 80% of Alberta's productivity advantage is related to having more people concentrated in high productivity industries like oil and gas. So this is really important, right? So the question is, what does productive diversification look like? And I'm not sure that term's sticking. It doesn't matter how many times I say it, people are not really repeating it, so maybe I'll have to work on the branding. But I think there's something there, and we need to be looking at both sides of that. The diversification of the productivity people should really get together for a drink and talk this out. But in the meantime, you can read this paper. So I just want to set the stage for the panel, because one of the things that businesses are saying they're worried about now is not so much, and you heard this from the presentation this morning, not so much labor shortages and supply chain issues and even cost pressures, but more and more businesses are saying they're worried about something called uncertainty in the Bank of Canada survey, which is a little bit unclear to me, but taxes and regulation, policy risk, they all look for demand and credit conditions. And one of the things we heard, ATB Capital Markets did a survey of the energy industry, and that the policy risk is actually ranked near the top. And so I'm sure the panel's going to get into it, but there's a lot of talk now about overlapping regulations and sort of complex regulatory complexity, and that weighing on investment decisions. And so that is something that's become more important. So I just want to end with like a call to action type slide. Like really, I mean, if this chart doesn't kind of raise your eyebrows and think, geez, maybe we should do something, I don't know what will. But that gap, again, this is index since over the last decade, it really has widened against the US. And you could show it against other countries too. We're declining, the US is rising. Which is really going to motivate the discussion coming up here, given that the resource sector has high levels of productivity, high levels of investment. And the other thing, while I'm up here, I should say, if you look at Canada's trade balance, merchandise trade, I was just looking at the August numbers that came out, and we had a merchandise deficit in the month of August of $1.2 billion, but energy was $12 billion surplus. And food was about $2 billion. So without agriculture and energy, this country would be running a very large merchandise trade deficit. And so I think that's a really important thing to keep in mind, in addition to the high levels of investment and productivity. Okay, so that's it, Trevor, and hopefully I didn't take up too much time. Thank you.
All right, thank you, Mark. I think that set the stage very well for what I'm sure will be an engaging panel discussion on issues facing the resource sector and opportunities into the future. And so to introduce the panel, I'm pleased to introduce Brad Harold, who is Special Advisor to the President and CEO of the Canadian Association of Petroleum Producers, and someone with more than 2 decades of experience in the sector and with CAPP in particular, and so I can think of no one better to help lead and facilitate this conversation. And so please join me in welcoming Brad Harold.
Thank you, everyone, and welcome. Thank you, Trevor. It's great to be here and host this panel today focusing on the resource sector and its role in Canadian productivity. I believe what we've heard in many of these sessions is that we've diagnosed the problem, which is a slump in Canadian productivity and business investment. What I really like is that we're also talking about what to do next, about solutions. I may be biased, but I believe this next panel will discuss one of the key areas that can provide solutions to this productivity problem, which is Canada's bounty of abundant and valuable natural resources. Canada's economic foundation remains intact. We are a resource-rich nation with a global reputation as a trusted trading partner. Our resource-based industries, mining, agriculture, forestry, fishing, and energy, produce the raw materials countries around the world need to feed their citizens, but build their industries and power their economies. Our natural resource industries are also the most productive in the country, and we have seen that with Mark's presentation, and have even more to give to the Canadian economy. We need to get our best players on the field to fix this productivity problem. And to talk about this today are some of Canada's leaders in this space. First, I'd like to introduce Gitane de Silva. Gitane is the founder and principal of the consulting firm GD Strategic. She previously served as the CEO of the Canada Energy Regulator and as Alberta's Deputy Minister for International Intergovernmental Affairs. Gitane is also a seasoned diplomat and a specialist in Canada-US relations, having served as Alberta Senior Representative in Washington, D.C., and Canada's Consul General in Chicago, among other roles. A respected public policy leader, Gitane is the Special Advisor at Blue Rock Law, a global fellow with the Canada Institute at the Wilson Center in Washington, D.C., and a board member with the Public Policy Forum. Welcome, Gitane. Next on the panel is Dr. Heather Exner-Pirot, who is the Director of Energy, Natural Resources, and Environment at the Macdonald-Laurier Institute and Special Advisor to the Business Council of Canada. Welcome, Heather. And also joining us today is Jeff Lawson. Jeff, in his role as Chief Sustainability Officer at Cenovus, ensures environmental, social, and governance considerations are embedded in the company's strategic and business plans. This includes overseeing communications and stakeholder engagement with Indigenous communities, governments, and community partners. Jeff, welcome. Thank you. I'm going to start and give each of the panelists a couple of moments. Drop the mic. To say a few words, open up and get the conversation going. And Heather, I'd welcome you first.
Great, thanks so much. And congratulations to Martha and Trevor on organizing this great conference. You know, it's hard for me sitting between Gitane and Jeff to talk about oil and gas, so I'll skim over that a little bit. But to point out, you know, we do have a productivity crisis. There is, you know, you can think of an alternate universe where we had TMX, Northern Gateway, Tech Frontier, LNG Canada, all online, you know, in 2022, say, when it was a great year for energy prices, and we'd be in a very different situation in Canada today. But we aren't, and that's a big problem for our productivity. But despite all that, oil and gas could be doing worse. That we did have TMX come online this year. We do have LNG coming on in a few months. And Canada is probably the world's leader in oil and gas growth this year. And of course has been, you know, instrumental in the economic growth and the trade balance that we do have. And I say that because for other sectors it is worse. It could be better for oil and gas, but it could be worse because for mining and electricity it is worse. And so I'm going to touch on critical minerals and mining, you know, in my discussion here and be the standard bearer, I think, for that sector today. But just looking, I wrote a paper a few months ago that you can see on the major projects inventory. So NRCan every year evaluates the projects that are planned and under construction for the next decade. And oil and gas is down 43% since 2015, pretty stark. But electricity is actually down 49%. In a time where we're supposed to be having a green transition, investing in those things, moving to electrification. And mining is actually down 55%, you know, when you take into account inflation. So, you know, the capital expenditures, the growth in mining, very dramatic. And when you think of what we need for an energy transition, where we spent or, you know, committed over $50 billion to EV manufacturing, for example, Canada is actually producing in the last decade about 40% less graphite, cobalt, and nickel, 9% less copper. Canadian production of copper peaked in 1991. And so we may think of ourselves as a mining nation, but that has been atrophying to a great deal, and even more so on the processing and refining side, to the point that where I think, you know, the oil and gas problem is a huge economic problem, the mining problem is starting to become a huge security problem. that we are very dependent on China, we are very dependent on other regimes, and you know, as we want to be useful to the Western Alliance, we want to be useful for the United States going into CUSMA renegotiations, figure out especially not only oil and gas, you know, the United States has never imported more oil and gas from us, but in particular, how to be incentivizing and creating more mining production and electricity. So I'll stop there because it was supposed to be short opening remarks.
Thank you, Heather. Gitane, we'd welcome you for a few opening remarks.
Well, thanks, and thanks everybody for joining us for this session. So we've heard a lot yesterday and today about regulation and basically how it's bad, right? How it's preventing our productivity and economic growth. So I'd like to start a bit as the former regulator up here in defense of regulation, or at least putting it in context. So just to remind people that regulations exist in large part to mitigate or manage risk, right? Regulators are set up by legislation. So, you know, we duly elect our members of parliament or provincial legislature, and they set up the framework under which the regulator operates. So when I was head of the regulator, I didn't just decide one day, oh, every pipeline over 75 kilometers in length, let's have a joint review with the Impact Assessment Agency. That was a political decision debated in parliament, passed in legislation, and you're giving a mandate to implement. So just to remind people that there is that context there. And I think people want regulation. Do we need to do it better? Absolutely. Do we need to be quicker, more nimble? All of these things, yes. And yet, if you have too little regulation, you can end up with a 737 max, right? When you don't have a regulator actually overseeing certain safety issues, there can be a downside. So you really have to work hard to strike that balance. And so I would just say that being a regulator is really hard, and it should be, because you are constantly striving for that balance. And in Canada, in the resource sector, much of the regulation we do is in the public interest. But how do you define that? You're constantly balancing the economy, the environment, landowner rights. And so you really are walking constantly on this tightrope, right? And I learned fairly early on in my job that if I landed somewhere where everybody was just a little bit mad at me, I probably had made the right decision. And it's further complicated in Canada by our Constitution, right? I mean, we know this very well here in Alberta, right? Natural resources fall under the jurisdiction of the provinces. And yet the federal government, we have some joint areas of jurisdiction, right, on environment, and then there's some areas where the federal government has priority. So you look at issues around navigable waters and fisheries. And so you need to work together. And I think that's a great challenge in Canada at the moment, right, where perhaps the provinces, all provinces, not just Alberta, but many provinces in Ottawa aren't getting along super well. And so we need to focus more on that desire to actually get things done, right? We're not going to reopen the Constitution, let's be honest. And even if there is a change in federal government, reopening Bill C-69, for example, that established the energy regulator, when you change regulations, you're sending an investment signal, right? So we have to be very mindful about how we proceed down that road. So things we can and should be doing is really focusing on where we have a common interest and how to get to yes. Can we focus more on things like mutual recognition, right? I think that regulatory harmonization is a wonderful and laudable goal, and it takes for friggin' ever. So instead, let's focus on the fact if we have an environmental assessment, are we looking at achieving the same goals? And if a province does it, the federal government doesn't need to redo it. Let's accept that and let's move on. And then we also need to remember we need to respect treaty and we must uphold the honor of the Crown. Right? Treaties are legally binding documents which Canada entered into with First Nations people, Métis and Inuit. And so we need to be respectful. We need to have meaningful consultation. Otherwise, we will end up in court, right? So you cannot forget that very, very important step in the process. The last thing I will just say is almost all of our energy infrastructure in Canada crosses a border, right? Either, I mean, we have tons of it here in Alberta, but when we talk about greater exports either outside of our province, we need to cross a provincial border or an international border. And that also gets complicated because I think a lot of Canadians have the perception that we really understand the US because we watch American TV, we can say trash and soda and y'all. But it is actually a very different system, right? So when I was head of the regulator here, I regulated about 80,000 kilometers of pipeline. My counterpart in the US, closer to 3 million miles. right? And so jurisdiction is different in the US, politics are different in the US, you have the same types of regional issues we do here in Canada. And so I think that just also adds another layer of complexity. Not to say we can't get things done, but people need to be mindful of that. It is a challenging space in which to work. So again, how can we focus on those areas of common interest? What trade-offs are we willing to make, right? If you want to get things built faster, are you okay that you will disrupt the habitat of a hummingbird to get more oil to Tidewater? It's a genuine question, right? So we just need to be very mindful of those trade-offs as we look to streamline regulation. Thank you.
Great, thank you. Jeff, we'll go over to you.
Sure. One thing you said, which I couldn't agree with more, we just need to have a discussion about all things that factor in. We're too polarized in our discussions. I'm going to talk about the oil and gas industry, of course, that's where I work, and expanding that industry and how productive we can be. And you should ask, well, what are you doing to deal with the environment? What's your care factor on that? How are you balancing that? Like, those are the exact discussions we need to have. So it's funny how things go full circle. So when I was in university, I'd go to economics classes and I would find them dry. And now there's Mark and Trevor, and it does go full circle, and I find it fascinating when I think about how important that is to the country. And so I think through, our industry and what we're dealing with, and we just finished a cross-country tour of the Chamber of Commerce, just talking about policy and regulation and just similar challenges for every industry. So it doesn't matter, it's agriculture, it's mining, it's potash, forestry, it's us. And I think what we're all seeing is we've got policy measures that are so focused in certain areas, and they're impeding productivity, they're impeding business, and we respect why the policy is there. So that's true and that's good. But what we're not seeing, or what I'm not seeing, our company's not seeing, we're not seeing a policy focus on the economy of Canada, making it better, making it stronger, making it more productive, making things more affordable for people, having a better balance sheet as a country where we can afford our social systems, we can afford our schools, we can plow more. We're not seeing that focus on industry happening first to let all these other things happen. And maybe that's fine, maybe that's what people would like, but I don't think that's what people are being presented with. So in our business, biggest challenges, policy, regulatory uncertainty, it's huge. It's the biggest one. That's why people aren't investing. We'll talk about that a bit more further. That said, we invest the majority of our capital back in our own country. We're proud Canadians. We love the business. We think there's a lot of good we can do with it, and there's more we can do. On the competitiveness front, on the one hand, it's frustrating. On the other hand, it's low-hanging fruit. So why is it frustrating? We've got tiers and tiers of different policies coming at the industry, and we'll talk about it more, but they're not just axe the tax you hear from consumers. There's an escalating industrial carbon tax. There's methane regulations. There's clean fuel regulations. There's a potential emissions cap coming, which we think is just bad policy. With Bill C-59, which effectively we would say muzzles us from talking about anything we want to do good in the environment. And you layer all those things on top of each other, and you try to figure out a long-term business plan where you want to invest billions of dollars over 3 years or 5 years or 10 years, and it's really hard to make the decisions. So that's the frustrating part. The positive part, the low-hanging fruit part to me, is that we all recognize it. We're all talking about finding a balance, and I think we can work with our governments to actually find a balance and try to get the focus where we think more it should be. It should be on strengthening our economy and balancing out other interests appropriately and just making Canada a stronger, better place so we can support more things than we want to do instead of seeing our productivity slide the wrong way. We're second worst of the G7 out of all the OECD nations. We're declining, the majority are improving, and it's an embarrassing trend. But I will say we're blessed. We have strategic resources. We have natural resources. Again, agriculture, water, potash, oil and gas, precious earth minerals that the rest of the world is not blessed with. And if we want to find a way to develop them and maximize profit for Canada with a bunch of ripple effects to the country, we can do that. So to me, that's That's the positive in all of it.
Great, thanks, Jeff. Gitane, maybe I would go back to you. I think it's such an interesting conversation. You spearheaded leadership at the regulator through a very tumultuous time with really big projects on the go. You were through fire, flood, global pandemic. I wonder retrospectively now, when a proponent comes forward, it's really, we see an addressable market. And there should be friction as we manage values and worker safety, environmental outcomes. But when they get into kind of a 5 years, 7, 10, talking yesterday to the IEA about the age of electricity, we did some work. It's 8 to 16 years to build an electricity transmission line. Addressable markets kind of vaporize, and so you almost have to be clairvoyant in Canada now to take that leap and navigate through that process. So much complexity. I'm just wondering, as you looked around with your international eyes and you're seeing countries address things like concierge services, national interest determinations, like since we've been making rules, we've also been looking at red tape reduction. I wonder retrospectively now if you could share a few thoughts on what the opportunities are in a Canadian context.
Yeah, it's a great question. I think that, I said before regulations exist by and large to mitigate risk or manage risk, but they also exist to set the fair ground rules for competition, right? And I think it's a matter of perspective. And I think there has been, as societal context has changed, people's expectations of regulators have changed. And, we can't operate in any industry now how we did 10, 15, 20 years ago, right? So people's expectations around the environment, engagement, Indigenous rights are different than they were. And I think that's a positive. But how do you shift the frame to focus more on the competitiveness side of things? How do you shift the frame from a risk mitigation to an enhancing competitiveness frame? I know I heard an economist from Ireland speak and got asked the question about, corporate tax rates in Ireland and how that was integral to their economic regrowth, right? And he said, well, the political parties in Ireland got together and just decided that they would agree to a rate and they wouldn't change it. And I wonder if that's something that we need to do in Canada, where if we actually want to incent the investment and fast track any linear infrastructure is hard, not just oil and gas, right? Electricity transmission, it's all hard. Even the de Havilland plant we're building here outside of Calgary, that's a 10 or 12 or 15-year plan, right? So how do you make that go faster? And I think part of that is that coming together. And could we actually agree that this is what we want to do and then set it and say we're going to come back and adjust it, tweak it in 5 years, but maybe not overhaul it for 10 or whatever, right? So I think that's somewhere that regulators can play a role in feeding that information into government. And I think also further encouraging people to really participate in the process, right? Like, for example, CER is currently reviewing its onshore pipeline regulations for the first time, right? That has huge impact. So get people to actually participate in the process, come forward with solutions, and that also helps the regulator make the case to focus more on the competitiveness side of things, while still protecting the things that people hold dear.
I would invite Jeff or Heather if you want to get in on that question. Any additional observations?
I do. And I was at the Ontario Energy Association conference a few weeks ago and heard this interesting line, speaking to what you've mentioned, Gitane. Regulation is supposed to protect us from risk, not from progress. And I think there's a sense from everyone that regulation is now preventing us from progress. And it's not just a Canadian phenomenon, to be fair. This is a Western phenomenon. We've seen it in the United States, and we very much see it in Europe, probably, the most restrictive. And I have to wonder, I'm a political scientist, not an economist, so take a slightly different view. How did we get to this point in 2024 where all of our economies are suffering from overregulation, where everyone wants permitting reform, regulatory reform, where we can't compete with China, for example, because they can just build faster and with less burden? And I think part of the answer and why resources have been caught in the crosshairs in this country is because, we urbanized very quickly. And I think 50 or 70 years ago, everyone knew a farmer, everyone knew a miner, everyone knew a forester, people, had friends that worked in oil and gas, or you saw where it came from. And today, I think with our urban environments, people think their lumber comes from Home Depot, and they think their food comes from Safeway, and they think their oil and gas comes from the Shell station, and they don't see what goes behind it. And we are able in a country like Canada to take it for granted, and what a luxury that is. But now there's, almost a diminishment of resources, I've heard this, that it's a 20th century economy, that we're hewers and haulers, that we would rather be in manufacturing, we would rather be in tech, we would rather move up, the ladder of technology. Thinking, not appreciate it. What Cenovus does and what its neighbors do is engineering masterpieces. TMX is an engineering masterpiece and not appreciating that. So I had to return to the hummingbird. It's a perfect example. There is a trade-off between building a pipeline faster and saving a hummingbird nest. And that trade-off is about $100 million. That's about what it costs to delay that project, to save that hummingbird nest for that breeding season. And let's count how many nurses $100 million is, how many doctors is $100 million, how many schools is $100 million. And that is exactly the kind of conversation we need to have in this country about the trade-offs on delaying projects, what it costs to delay a pipeline by 10 years, or to add $3 billion, and what the trade-off, and we're seeing it in productivity. And I feel like we're frogs boiling, and we've been boiling for 10 years, and just now we're starting to say, geez, it's getting really hot in here.
Jeff, I'd welcome you if you have any comments.
I would just say that's awesome. These two. I will talk about the oil and gas industry a bit now, and just some layering we're seeing going on. So we are an incredibly productive sector. I'll just give you some examples and why I think keeping productive sectors productive matters. So we have an older oil asset in our portfolio. It's called Christina Lake. It is the best oil asset in North America. And if we don't mine it, it's underground. We have to get the oil out from underground. And 25 years ago, we were getting oil out of the ground for $8 a barrel. Okay? Oil's $75 a barrel right now. That's a pretty good asset. 25 years later, we're still getting oil out of the ground at $8 a barrel. Because of technological advancements, because we've got a lot of smart people in the company working at different things, because we employ AI, because we can afford to do it and put resource on it and try to do things better. So as our industry does more work like that and expands, we train a lot of good young people and we lose them. They go out in other industries. They're going out, they're doing CO2 capture. They're looking at small modular nuclear. We're not going to do it today, but we've got people in-house that we're working on it that go out and do it. And so we are, well, the same time our sector's staying strong, we're training people for these other sectors we want, whether it's carbon capture, whether it's solar, wind, whatever, we're educating them. So that's terrific. Policy slowing down the sector is just that. It's just a cost, but I don't think people understand the ripple effects of the cost. So what do? We put emissions cap, call it a production cap, so we'll slow down production. So we'll slow down our exports. We'll take down our GDP. We will pay less in royalties and taxes because we're smaller. But if that's the decision, that's fine. But those are royalties and taxes that pay for our healthcare system. They pay for our community work. They pay for good jobs for our employees, and that will all ratchet back. And that's just the discussion we need to have. And we are just log jammed up with policy. And I have a huge respect for regulatory. I think we need it for safety, and we need rules in place, and we respect them. So that's not the problem. It's just new policy coming all the time and being really slow and uncertain that is slowing things down and hurting the sector, and then hurting what I think we can do that's good with the sector. And the last thing, just so people know, because I'm not sure everyone knows, it's the food to fork discussion. We produce oil and natural gas. That's what we produce. It goes to refineries. It's asphalt. It's jet fuel for every plane that we haven't been able to substitute yet. It's diesel for every truck that's running on a road taking groceries to grocery stores. It's low natural gas feedstock that feeds our fertilizer industry so they can actually make fertilizer for the farmers. It's the kilns for cement. It's smelters for steel. And we haven't found substitutes for those things yet. So not easy substitutes or not cost-effective substitutes. So we need all these transition items to come alongside our industry while it's still running strong. My argument would be you don't want to kill it first and then hope you can replace it with something else, because we haven't seen that happen yet.
Great, thanks, Jeff. Yeah, I just amuse down in the US at a conference, and it's not just proponents in Canada that are gruff about their regulatory system. You know, that friction, particularly in all the Western countries, I think we're laboring under a lot of kind of site-specific tyranny that's starting to obscure our macro progress. And so that friction, I think, is right across. We did a study with a bunch of G7 countries, and we're all laboring under similar challenges. You know, oil and gas, and I'll focus on that a little bit, as the vanguard in Canada, it's been resilient. I pulled some numbers, $81 billion in projects under construction right now. And I think we saw the bright spot that Mark showed, oil and gas related. But there's $174 billion in projects in the planned, major projects planned category. I think, you know, how would we start to get those off the bench? That's people that have said, I see an addressable market. Not all those are going to come to fruition. Some of them are competitors for that addressable market. But that's a huge queue of people that have put their hand up. Maybe, Heather, we'll start with you. You know, how do we bring those off the bench and get them on the field as some of the tonic that Trevor talked about to fix our productivity trouble?
Yeah, well, you know, I'll probably, you know, Jeff probably has some very concrete ideas of what to do because they're trying to track some of that capital. But I think some of it is just, you know, the investment environment that you have in Canada. And I'll go back to the Impact Assessment Act. I know, Gitane, we're friends. So I don't want to, ride regulators too hard. But the Impact Assessment Act has had a terrible impact on investment. And as mentioned yesterday, only one project has gone through the Impact Assessment Act so far, and that was Cedar LNG, and having Indigenous participation was a big part of it. And the sector that's affected most by the Impact Assessment Act, C69, is actually mining by a number of projects. And even, we are saying we want mining, we have a critical mineral strategy, but not under the IA, it's not happening fast. And then when they had a chance to do amendments, after the Supreme Court said, you have to make amendments, you have to change this, they did not change it in a way that would move the dial whatsoever on attracting more investment for mining or for otherwise. And so what do we do next? And Gitane is correct that no one wants to just have a vacuum and just get rid of C60. You have to have an Impact Assessment Act, whatever you call it, CIA or whatever you call it. And so now we need to have this conversation as part of, I think, this Productivity Summit. What changes do we want? How can we get social consensus? So it's not a conservative versus liberal, it's not an Alberta versus Quebec discussion. When this does change, that everyone agrees we do need some better processes, everyone agrees there's still a duty to consult, there's still constitutional obligations to Indigenous peoples. We really need to start building that consensus now so that, when there is a change in government, that there is an opportunity to do this painlessly, efficiently, that there's consensus. We don't go from, protests in the streets of Calgary in 2019 to protests in the streets of Vancouver in 2025. So again, building that consensus around what do we want a regulatory framework, what are our objectives in this country, I think is important.
Gitane, any thoughts for us there?
Yeah, I think you have to depoliticize regulation, right? There was a conscious decision made in Bill C-69 to increase the influence of cabinet over regulatory decisions, right? That is not the case on nuclear, for example, right? The CNSC, when it regulates, it makes its decisions and it informs cabinet, right? Whereas under the Impact Assessment Act or the Canada Energy Regulator Act, the decisions made by the Commission then go to cabinet for approval, right? So I think that's an important step because if you look at the major projects that have been canceled, some were canceled because the investment climate was so unwelcoming, but if you look at tech, that was a political decision. If you look at the renewables pause in Alberta, a political decision, right? So I think, as Heather was saying, you need to agree on what you want and then take the politics out of it, just agree on certain fundamentals. And it's tricky, super tricky, because these are issues that get people out to vote, right? But I think that's what we have to do if you really want to incent investment.
Great. Jeff, any additional comments there?
Sure. We need fewer policies. We need regulation. We need fewer policies because they're piling up on each other, and people can't figure out what they mean longer term. So here's lay of the land. Canada, 4th largest oil reserves in the world, and absolutely the world. So you've got Venezuela, Saudi, Iran, I think are the 3 in front of us, and then it's us. So you should know that. You should know that most foreign companies have sold out of this country. So they do not want to operate here anymore. There may be a variety of reasons for that, but one reason may be how difficult it is to expand or bring new projects online. And investors are investing less in our country, in this industry. So two things with our policies, if you took them and laid them alongside other countries, you would find that they're more onerous, difficult to digest, makes the industry less profitable than other places, just simply not as competitive. Money can go anywhere in the world, and it'll go elsewhere if we're not competitive. So competition's one. And the layering is another thing. The intent of a lot of the policy is not bad at all, but when you do take, again, an escalating carbon tax, and then take a clean fuel regulation, and then an emissions cap, and then methane regulations, and you layer them all one on top of each other, and you try to make an investment decision for the next 5 years, knowing that you have 4 new things coming at you and you're not quite sure how they're going to play out yet, and it could mean you would not make the investment decision, or you would. That's what investors, through our lens, look at our industry and they say, why would I put money there today because it just feels safer elsewhere? I'll wait until it's certain and I'll come back.
If I can just, very quickly, Brad.
Heather, go ahead.
If I have to hear it, you have to hear it. With the investment, the IAA, someone told me, is a foreign investor in the United States, in New York, said they call it the Don't Invest in Canada Act. I heard from a large mining company, foreign company, did their first foray into Canada a few years ago. Their motto is Canada never again. And I heard from an Aussie, this really drives me nuts, they've called us a banana republic because of the regulation. This is on mining. And I don't want to hear from an Aussie that Canada's any worse as a proud Canadian. So I hate all these anecdotes. I hate having to hear these in conversations. And as a proud Canadian, I want people to say, wow, Canada is the best at this.
Yeah, I guess the good thing is, you know, we all traveled the country in the last little bit. There seems to be a national consensus now that we have a real significant challenge in front of us. And, you know, people like this gathering to kind of unlock that. The first rule of holes is stop digging. And so we could take the Hippocratic Oath and do no harm would be a great first step, let alone fix things that are so complex. Maybe, Heather, back to you. I know you touched on the role of Indigenous communities. I believe right now Indigenous equity ownership in resource projects like LNG pipelines and power projects has surpassed $4 billion. Can you comment on the role Indigenous investment is having on major projects and a bit of bright light for us there in terms of the natural resource sectors and the role of Indigenous communities?
I'd love to, because it is a bright light. And you know, to go to Gitane's, point, there are constitutional obligations that regulators have to uphold, and Indigenous peoples know their rights very well and are very willing to exercise them. And that has been different in the last 20 years. It is part of the productivity conversation. When we got the duty to consult in the Supreme Court cases, a trilogy of cases in 2004, 2005 that affirmed that duty to consult, that was transformative for the resource sector. And it did add a lot of uncertainty and a lot of different barriers. That's absolutely true. But what we have seen in the resource sector is, some may have just fled or left and said, this is too hard, it's too uncertain. And some stayed and said, well, we better get good at this. And there, I defy you to find a better sector in the world than Canadian oil and gas in terms of the work they've done to provide really good participation, equity benefits, impact and benefit agreements. No, it's not perfect. I'll never say it's not perfect, but it's pretty darn good. And so what are those bright spots? And in general, I've done a lot of work with Indigenous communities. It's usually not, we don't want development. It's usually, we want to be part of the development. And we want to have the same benefits. And why would we take all the risk and all the environmental negativities and get none of the benefits in terms of the jobs and the wealth coming from our own territories? And so the solutions that we have found is not only, the procurement, and the oil sands are fantastic at procurement. We're talking about billions of dollars annually with Indigenous businesses, also with employment, and of course, with everything else, wages for Indigenous peoples in oil and gas are about triple what they are on average in Canada. An Indigenous oil and gas worker, I got this from Labour Force Survey, I'll be publishing it soon, makes on average more than a non-Indigenous oil and gas worker for the last 3 years running. So, you know, the gap in wages has closed. And then equity, you know, that's one we're all excited about. Alberta has been great with the Alberta Indigenous Opportunities Corporation. They've already put about $750 million out the door. If the TC Energy deal closes, that'll be another $1 billion. But Suncor did their East Tank Farm. You know, there's other deals outside of the loan guarantee. And this is the key. If we're going to have another pipeline in Canada, there will be Indigenous equity participation. You won't get it without that. And so it's not, you know, that we can't have another pipeline. Is that we're going to have to do it better. And we've figured it out. You know, that's the bright spot, is that we really do have some great tools to make sure that everyone is benefiting from Canada's 4th largest oil reserves.
And Gitane, I'd welcome you in both your time at the Regulator and the projects you oversaw. In terms of the maturity of proponents in dealing with Aboriginal communities, how are you seeing that evolution? Are you seeing the same bright spots?
I think absolutely it's getting much better. I think that some are better than others, for sure. And I think that those that understand, one, the nature of the Constitution and the treaty obligations, but two, that they're building a better project if they actually engage with everyone along the route, right? So as Heather was saying, people want to see economic benefit, and they want to see lasting economic benefit, right? That's true of Indigenous communities. It's true of if you're trying to build a pipeline, say, from Alberta to the East Coast, that every province along the way wants to get some benefit out of it. So I think that that was one area where I think the government pushing was probably a positive, because I'm not sure that everyone on their own would have got there as quickly. But absolutely, I think we're seeing tremendous progress. I think I feel like we're almost reaching a point, I hope, where a commitment to reconciliation is becoming a standard, right? That it's not something, I know we're seeing politics in BC where there's conversations around the UN Declaration, but I think that business and Canadians are understanding that this is crucial to the country's success, and they want to see everybody succeed. So I really think that it's a positive, and I hope that that trajectory continues.
Great. Jeff, maybe we'll go to you. I know this is also part of your purview. I saw a news story recently where your company was helping the local community out close to your operations with housing. I wonder if you could offer a few observations for us as that relationship's been deepening with your company.
Sure. I think I'm told that our sector leads in Canada. Proud of that. I'm actually told we lead in the world, and we should just use it as an example of a way to do business with people. So our progress has been over a decade, and we probably started at a rough spot, not knowing how to tackle this. And now the way we look at it, our friends and our partners, we touch a bunch of Indigenous communities, a bunch of Métis communities, and simply how we look at it, they are absolutely our partners, and they have an incredibly high regard for the land and for their resources and how development should occur, and they are good partners. And I'll speak to three things. The first is just the partnerships. And over the course of the past 5 years, we had a goal of spending $1.2 billion with our Indigenous partners on projects we were working on where they provided services. So that's not just writing a check. Those are people providing services. So we exceeded that. We were $1.5 billion over the course of the past 5 years so far. This last year, I think we're at $650 million. It's the most money we've ever spent on those partnerships. So again, that's just our money getting reinvested back in communities with people get a good living wage. So the numbers I got were average Indigenous worker, $52,000 a year. In our industry, it's $150,000 a year for the average Indigenous worker that is bringing that money home to their family. So incredibly proud of that. The other thing we learned over time, you just need to listen. So our industry, and I think other industries, have been bad for going in with an idea like, this will be good for you, this will help you, I'm sure you'd love this. We don't do that. We go in now and we just listen. We're thinking of a project. What do you need in your neighborhood? What would you like in your neighborhood? What would be helpful for you? So we did that some years ago, and the main need we heard of was housing. It's critical need for housing, safe places for people to live, clean places for people to live, not overpopulated. So we heard that, and we came up with this housing program that we've rolled out. We said we would build 200 homes. The budget was $50 million. We well exceeded that because of inflation coming out of COVID, and it's $60 million, and we're going to continue with that. And it's really impacting people's lives in those communities. So that's in addition to the labor piece. And the third piece is small, but I'm so proud of it. We have an Indigenous internship program at our company. We just started it a few years ago. And we started with small numbers, so it's doubled and trebled in size, which is great, but they're small numbers to start with. But what's so impressive is that we're taking young people out of communities, we're giving them training, and what we're seeing is they're sticking with the company. They're now trained, they're a valuable part of the workforce, they're a valuable part of our company, and they're bringing that back to their communities, and now we're getting more demand in the system. So it's all come over time, and those are all things I think we can apply to every sector. We can all learn from it and keep getting better from it, but we're doing really well there today.
Great, thank you. And if I'm happy at this point to take questions from the audience. It is a little bright. I need one of those golf visors. But you can start, if there's any questions from the audience, to queue up. Maybe, Heather, I'd go back to you. We touched a little bit on the kind of international perception of Canada. The demand for our goods from a global perspective. We're going into what seems like an interminable election result in the United States. Possibility there for some trade frictions. Just maybe a few notes for us on, where Canada can play in that world with global security, critical minerals, and how we're looked at and how we can improve that.
Yeah, and this is our calling card on the world stage. When our allies talk to us and make MOUs with us, you have a look, it's usually critical minerals or energy. And with the United States in particular, you're probably aware, they went from the world's biggest importer of oil to the world's biggest producer. But they're still a net importer of oil. And they've never imported more Canadian oil than they did this summer. And it'll keep coming up because TMX came online. And 60% of their imports now come from Canada. And they can't displace their oil, which is light and sweet and getting lighter and gassier, because their refineries require a heavy oil, which is what Canada has. So, and critical minerals too, and again, going back to the security aspect, we saw what happened with Europe being reliant on Russian gas, but we are all that reliant on China for critical minerals, up the supply chain, up the value chain, and everything we need for electrification, but also everything we need for defense supply chains. And if China invades Taiwan and you have to put sanctions and you also have to send munitions to Ukraine and fighter jets here and fighter jets there in the Middle East, you cannot be dependent on China for that supply chain, and that's the situation we're in right now. So there's pretty good bipartisan, consensus in Washington on this. Is the United States in competition with China, and we can be helpful as Canada by providing some of those critical materials that you need for the defense supply chain and for the whole economy and to reshore. And Europe needs it too. They definitely don't have they're net importers of all these things. So to get to the point, when we go into CUSMA renegotiations and they have a big threat, we have not been spending 2% on defense. Senators are mad, they're writing letters, Wall Street Journal op-eds are happening. The one thing we will bring to that table is energy. We are indispensable to the United States when it comes to energy and also increasingly critical minerals. That will be our card to play, and it would be crazy to do something like a production cap, an emissions cap, which we know will take off between 600,000 to 2 million barrels. All of it will come out of the Americans' end. To do that to them when shale is plateauing ahead of CUSMA renegotiations. So let's bring something to the table. Let's not diminish the sector, which is what our allies actually think we're particularly useful in right now.
Great, thank you. I'll pick the international thread up with our other two panelists maybe in a minute, but I think we've got a couple of questions from the floor. I'll go here first.
Okay, thank you. Serge Dupont from Bennett Jones. Thank you to all the panelists, and thank you to Mark for setting it up very nicely. I want to make a comment, and then I'll get to a question. When we talk about regulation, I think it's really important to distinguish tensions in two things. One is process. And when we're talking about project regulation, Impact Assessment Act, I don't think generally we're debating the outcomes. We're debating the process. The process is horrendous, but the industry has no problem with meeting very high standards of environmental responsibility. They know how to do it, but you have to go through a process, and the process is horrendous. When we talk about GHG emissions CAPP, it's not the process we're talking about, it's the standard, right? It's the outcome, if you wish. And what I think average Canadians who have seen Mark's presentations, the extent they're able to understand productivity and all its components and so forth, but certainly listening to this panel, I would think a focus group of Canadians would say, yeah, like, we understand that. But then they'd also say, but what about GHGs? Like, what is the industry prepared to do there, right? And when I was deputy at NRCan, I had a real problem getting folks from the industry to tell me, and at the time, this was a conservative government, was very supportive of this industry, wanted it to grow. But from a public relations point of view, you had to tell a story to the Canadian public about the contribution this industry would make also to greenhouse gas emissions. And I was asking the industry, okay, show me a chart, whether it's CAPP or members, show me a chart of what you're actually going to do in terms of emission to help us on a story about this industry growing while also making a contribution on the greenhouse gas challenge that we have. And I've always had the challenge, a difficulty getting that chart, Jeff, and I'm kind of asking, what is the industry prepared to say about, okay, if there is no CAPP, what is it that we're going to do? Because when I read the MD&As of the different corporations, they talk about their investment plans. You don't see a lot of that. You kind of see it in the part of the constraint on the regulation. So what would the industry be prepared to internalize as a goal to grow and make a contribution at the same time to at least reducing the intensity on greenhouse gas emissions?
Sure. That's the discussion we should have. I'm gonna coach this a bit, and it's wimpy, but we do have this new Bill C-59 out, which effectively says, if I say something about targets, and it's not substantiated by an internationally recognized standard, our company can get sued, and so can every other company. The problem is no one has told us what the standards are. So until we know what the standards are, it's really difficult. But, so all that said, my comms people are cringing now because now I'm going to talk. Notwithstanding that legislation, industry is still doing everything it has been doing to be responsible. So what should we be doing? We should be minimizing land use. We should be minimizing water use. We should capture emissions where we can. We should minimize GHG emissions. So those are all the things we should do. So some things we have been doing, as there's the Pathways project, is all the big oil sands companies looking at a monstrous CCUS project to capture CO2 emitted in the oil sands. We spent a couple $100 million over the last few years, just in the development planning stage to push this along. We have an RFP out for pipe. We're negotiating with the provincial and federal governments, and it's an incredibly long, complicated process. So that would be a massive carbon capture process. The problem is there's 14 different smaller projects embedded in it. It's not going to happen in 3 years. If it occurs, it's the entirety of the project is going to take through 2030 and beyond. So it's difficult to say, we'd capture X because it's a longer term project. What else are we doing? We want to minimize our energy use, and by doing so, we want to minimize emissions. So Cenovus, I can tell you, in the last few years, alongside the government of Alberta, where we got some funding, but most of it we funded ourselves, we're looking at small-scale modular nuclear. Why? We want to see if we can deploy it in the oil sands. If we could, we would not need natural gas to burn, to create steam for our SAGD project. If we do that, we would get rid of materially our natural gas emissions. I think that technology is going to come. There's just an Amazon announcement out, I think, yesterday. They're going to deploy $500 million in the US, and they're going to get after it. But I think it's a decade away. So that's one thing. We use AI in the oil sands now in our SAGD processes, so we put steam underground, but you imagine in the past, you would just put as much steam as you could underground and get as much oil as you can out. Now we try to see where it's more productive, less productive. Can we fine-tune it so we use less steam? By doing that, we use less gas, we have less GHG emissions. Imperial just announced a little while ago a new solvent process, so what does that matter? We're doing the same thing. We're all investigating it. So we're seeing we take lighter oil, condensate, solvents, put them in the ground, mix it with a heavy oil, get it out. What does that do? Again, I don't need as much steam. I don't need to burn as much gas. I lower our emissions. So those are just all the things that we should be doing and that I am comfortable talking about without giving you a target of exactly where I'm at. And I'll give you one example, just why the target's frustrating. A good example is methane emissions. There's a fight about how you should properly monitor methane emissions. People talk about bottoms up or top down. Bottoms up just means you go to all the instrumentation, you go to the valves, you go to the pipe, and you measure if you have any methane emissions. Top down just means you're flying over the area and you monitor and you're going to get a different reading depending on the time of day or if something's got more or less coming out of it. And so people will argue about what the proper measurement is. We haven't been told what the proper measurement is now, and I can tell you we're working to reduce our methane emissions, but I don't want to give a number anymore. So I want to give a number when I can safely give it. So long answer, but those are a lot of the things we're doing, and you're right to ask the question.
I'm really happy I'm the facilitator today and don't have to answer that one. Maybe just one quick observation for you. I think as Jeff just answered, almost a quarter of a century at the trade association, it's not monolithic. And we can answer things sometimes to say industry is this. There are hundreds of licensees in Alberta with a lot of different strategies. Some are going to be really successful about guessing what those future market conditions are, and some are going to wink out because they guessed wrong. And that structural competitiveness is a strength for our sector, not a weakness. Gitane or Heather, additional thoughts there? I think largely aimed maybe at an oil and gas, and I can go to another question, but if you have a quick
I would just say this requires a more strategic conversation. Like, companies are going to follow the money. The money is wanting people to improve their environmental performance, so that is happening. But at the same time, you need to make sure you're making policies that don't damage your economic competitiveness to a point when, as Heather points out, the world wants our natural resources. Our most important ally wants our natural resources. We're targeting one industry. Yes, the emissions are large. This is a global problem. We're not talking about cement. We're not we need to be much more strategic in this conversation than we're being.
Terrific. Heather?
I'll just quickly add a non-oil and gas perspective. I had a paper or an article in the Hub last week wanting to look at it. We know that more resource development is good for our economics. We know that. We know it's good for our security, but it's also good environmentally because almost every Canadian commodity, whether it's aluminum, lentils, wheat, LNG, is world leading, usually in the top quartile, often in the top decile. And I'll give one example, metallurgical coal. People hate coal. That is one under the Impact Assessment Act that the minister will use his political powers to designate, even when it should be a provincial jurisdiction. Canada has the lowest GHG intense metallurgical coal in the world. And it should be the last thing that we are taking off the table. And so people have to go to higher emitting metallurgical coal. So yes, coal bad, but as long as we're making steel, don't we want it to be the lowest G intense coal that you can have?
Great point, thank you. We're going to go out here for a question.
Just a quick question for Gitane. These regulations get made and then technology changes, but I've come across situations where regulations, they become irrelevant, they've got poorly wording, but there's still a risk to anyone trying to go through the regulatory environment because a regular look at that in the lower echelons, you say, well, you can't do that because of this, and yet these regulations, you start to, you got to go to the top of the regulatory inches to get around them, and this obviously creates a lot of inefficiency. Can you comment on whether or not internally the regulation bodies have ways of identifying these regulations and eliminating over time or rewording them or whatever needs to be done?
Yeah, absolutely. I mean, you should be looking at your regulations and making sure that they are up to date. They should be, at best case, forward-looking, and at worst case, at least not preventing good things from happening. I think it is a challenge, though. I mean, I often tell this story. I went to UBC. I lived in a dorm when I went there. At the time, Vancouver had a bylaw on the books that said any residence housing more than 6 women was a brothel. So technically, all 4 years of university, I lived in a brothel, and they'd never thought to get rid of that bylaw. So I think it's not limited to the regulatory context, is what I would say. But yes, absolutely, you are constantly looking at, you should be, a best practice would be to always looking at your regulations and making sure that you're evolving. A best practice also is not to regulate a technology, but to actually regulate for an outcome. So you're not picking one technology over another, you're letting industry decide how best to achieve that standard. And then I think also if industry sees something, they need to speak up, right? Because people are human, things fall through the cracks. So if you see something that's not working, speak up about it, get the regulator to address it, and then by and large, I think they're very happy to make the change and incent that progress.
Yeah, I don't see another question there. Give a wave if you, oh, there we go. Go ahead, please.
Thank you to the panel for some really great discussions. My name is Varun Srivatsan. I'm with RBC Economics. My question is on, it seems to be the case that the pendulum swinging on regulation broadly in this country, but for every piece of regulation that's viewed as red tape, there's a constituency for it. Another party views it as a check or balance. So how do you feel we are going to manage that as a country, whether that's industry, whether that's regulators, whether that's, just common folk, in terms of the pendulum swinging the other way, in terms of regulatory coordination, consolidation, and getting more stuff done? I feel like that is the push and pull. And if Canada is viewed as a paragon of, for instance, responsible resource development, people are going to ask us, to put our money where our mouth is, which is to say that we have a strong regulatory system. But to your point, it also kind of curtails accelerated project development. So I'm curious to hear your thoughts about that.
I think we'll go to Gitane on that. You've probably been closest to the friction elements there.
Yeah, I mean, it is super tricky, right? If you are, like I said before, when you're making a decision, you're usually upsetting somebody, at least a little bit. So I think as much as you can drive that conversation to common principles, right? If you can agree on the outcomes you want, and yes, like the hummingbird, great example, right? Like, do you want to get something done? What is the local impact? How do you mitigate that? And I think communication is really crucial, right? You, as a regulator, now, the adjudicative part of regulators often doesn't explain their decision, right? They say their decision speaks for itself, but I think that you need to figure out ways to explain to those communities that perceive or actually feel a negative impact of a decision why you made the decision that you did, right? It's like, I listened to you, and for these reasons I did that, and what accommodations can be given. Not only, I mean, that's in the Indigenous consultation concept, but also, if I think responsible companies, when they're operating in a community, they want the community to have lasting benefit, right? So if there is a negative outcome, how do you mitigate that? But I think that if you can focus on common principles and then you keep going back to those and then explaining why you made the decision that you made and how you're going to mitigate as much as possible. And then people just have to understand that not everybody's going to win all the time, which is the really, really hard part, I think.
Great, thank you. Any quick comments from Jeff or Heather?
I'll just say, this is a cultural issue in large part, is that, I grew up in that time too, where you aren't to be good for the environment. I think, as kids, you had, Earth Day and you celebrated it, and that was who was good and right in the world, and that's who we thought, we all care about the environment. Of course, you're a bad person if you don't. But it's now to the point, I think, where, for a long time, we privileged those who were against development rather than those who did development. And so again, it's for me, it's a rebalancing of what do I, we can't go on like this. The status quo is not able to continue, and so we need to really value. And I hate to say this, but think like Art Deco from the 50s, where they loved the worker, and they loved, the sickle, and there were statues, kind of Mexican, like, they loved workers and industrialization. And maybe we went too far with, how we let industrialization happen in the 50s and 60s. And of course, you needed to take it back and have an environmental movement. But clearly, we've gone too far the other end now. So to your point, we do need, the pendulum is going too far left, and then the pendulum is going too far right. And that's not good for business either. Projects take more than an election cycle. And so there's a lot of risk when you're developing a project. It doesn't matter who it's going to, things will change. So having a large center of the Canadian society in the middle, agreeing on what we value, is the most important thing, I think, for us to move on today.
I'll just add one thing. I think we have to have a bit of faith. I think we have a lot of good people in a lot of good industries that are very responsible, and you have to believe that. So if we think the pendulum's gone too far and we're worried it's going to go back the other way, there'll be no checks and balances, I can tell you that a bunch of things are just habit and proper, and the industry all industries are going to keep doing them properly because that's what it expected. So the perfect example here today was our discussion about Indigenous relations. Like, constitutional challenge in the courts, mandated. It's just a normal part of our business today that we think that's actually how we should operate. I don't think my young people in our company would actually know it's a legal issue. That is actually just how we operate. And I drove in here today and I backed in my parking spot because you can't go on one of our sites and park nose in because it's more dangerous to back out. Some of these things, good practices, just become habits. And I think we have to have some trust in the system. We got a lot of good people in the system. We can let it go back a bit, and it should be fine.
That's great. I think we have another question here. Please go ahead.
Thank you. Martin Wilkins, the Lorraine Group. I do oil and gas consulting. And I think you're right, Jeff. Best practices, safety practices are integral. But I wonder if we're not, and this is to the panel, I wonder if we're not seeing, not just, Gitane, over-regulation. I've seen it for decades now, but an absence of a sense of urgency. Professor John Cotter at Harvard University wrote a book several years ago called A Sense of Urgency. I purchased a couple of dozen and I sent them to many CEOs in the oil and gas sector, both in Houston and in Calgary. And I only got 2 responses. And both of the responses said, we're dealing with tiers and over-regulation of our industry. And they said, we'd like to speed up the process. Anecdotally, a couple of years ago, I sat with the CEO of a major oil and gas firm that was involved in the Athabasca oil sands. He'd floated an IPO in the Hong Kong Stock Exchange. And he got a lot of the work done. And after a period of 8 or 10 months, he was called back to Hong Kong. And he sat down at a table with 5 people that represented $17 trillion in investment. And I stopped him at that point. I said, you mean billion? He said, no, trillion. And they asked him, they said, how come this project isn't up and operational? Well, he said, we've got the Alberta Energy Regulator, we've got the Federal National Energy Board, and they said, stop. We're going to repeat the question. How come this operation isn't functioning? You've had 8, 9 months to get it up and operational? And he was dumbfounded. He didn't know what to say. And he's telling me this story over Starbucks after he'd been released from his position as CEO. And he told me that the Chinese would have had, probably 15,000 people up there and had it running in 6 months. And damn the regulations. Now, we have to respect the regulatory because, as Jeanette said, we've got a certain risk component in there. But I wonder if we aren't being hampered by a lack of a sense of urgency.
I'll go.
Go ahead, Jeff.
We had an executive offsite just last month, and we had imperatives for our company. And one, to get things done, was to retain a sense of urgency. So things go through an organization, they get lost, they don't get done unless you keep them urgent. So that was one. 2 was, if you have 20 priorities, you have none. So you actually have to prioritize things. And I think that's a good segue back to what Canada can do if improving our economy, backing sectors, not a sector, but different sectors, making policy easier to navigate and more certain. If that's actually a priority and it's urgent, to me, I'm optimistic on this. We can do it. I couldn't agree more. Needs to be a sense of urgency. There's got to be alignment, and that's where it's got to be bipartisan. It's not one party, another party. A government, the people we elect, should jointly agree this is good for Canada, and they should work on it together and set the politics aside.
I'll say quickly one other example is, the next gen uranium mine, again, to try to have non-oil and gas funds, but uranium has a great price right now. We want to have a nuclear renaissance. We also want to get off some Russian enriched uranium. NextGen has done quite a good job in northern Saskatchewan engaging with Indigenous communities. They got the provincial EA, over a year ago, I believe. So here's a project where NextGen is well funded. They could put shovels in the ground. The commodity price is good. Indigenous communities are on side. The province has done the EA, and the holdup is at the CNSC right now. And I think it was a week or two ago, whatever their process and their timelines were, they said, we're delaying it another month. And in a month, we may delay it in another month again. And here, NextGen is chomping at the bit, and its investors are chomping on the bit to get these shovels in the ground, and the community won't really start benefiting until those shovels are in the ground. So another, this is one example, but it's, right now in Canada, we have a critical mineral strategy, we have all these goals, and here's an example where it is regulation taking even longer than they committed, and that's holding some projects back.
Thank you, Heather. Quick comment, Gitane, on balance or urgency.
Yeah, you have to decide what you want. I mean, I would have people come to me and say, why can't you be more like Oklahoma? I can get my permit in 7 days. Well, in Oklahoma, they also have a number of grass fires every year for methane venting. So I'm not saying one's good or bad. It's just what do you want as a society? And I think that, I had the same when I worked for the province and I traveled to China there. Why isn't TMX built yet? Well, we can't just expropriate land here and flood it or move groups of people. That's not how our government works, right? So I think we need to accept the Constitution is what it is. And then again, I come back to my earlier point, you need to actually be willing to make it work. So you need to come together on those common goals, what you actually want to get done, and then figure out how to make it work. Be willing to play nicely together in the sandbox as opposed to constantly just shooting arrows across the bow.
Thank you. I was just in Southeast Asia last year, and we don't want their air, trust me. I think I see another question here.
If I'm allowed, I have two questions. The first has to do with the sense I got from some of the speakers was that because the labor productivity of the oil and gas industry is so high that we should be privileging that particular industry as far as our policies are concerned and want to do nothing to kill the golden goose. But it's inherently high because most of the value in the oil and gas industry comes from the capital. The capital to labor ratio is much higher than a lot of other industries. And so I'm wondering, and I asked our foreign guest speaker about this, whether looking at total factor productivity as one of the components of the discussion that we're having here about the structure of our economy and the policies that relate to various industries ought not to be something that's considered. That's my first question. The second is related because one of the other factors is that although our obligations to the rest of the world in the greenhouse gas emissions management process that's global are now voluntary. Eventually, they're going to gradually become more mandatory, and so that is essentially a capital stock that we have as a country, and one way of managing it is through greenhouse gas emissions charges, making them high enough that we actually meet our obligations, and so. I'm wondering about this whole concern about the emissions cap, whether that could be treated by having a higher greenhouse gas emissions charge or changing the structure of the international negotiations so it's the country that uses the resource bears the responsibility for those emissions.
We're getting close to time. I know there has been friction around the multi-factor measurement of productivity, and it's probably best for our guests to scrum maybe with Mark or Trevor. But maybe on the greenhouse gas ones, maybe, I don't know, Jeff or Heather, we met, market-based signals, regulation. We tackled the emissions cap a little bit with some thoughts. Any short thoughts there as we conclude our session?
Those are all good thoughts, so thanks for raising them. I think the harsh reality we see is that we are a small part of global emissions. And we're holding ourselves to a really high standard, and I'm not saying we shouldn't, but the rest of the world, various parts of the rest of the world are not holding themselves to those standards. So that's just a fact that we're dealing with. So if we want to be best in class, while other people aren't holding themselves to the same measure, we will, hurt our industry, will hurt our economy, and that's a decision that, people are going to respect, but that is absolutely what is happening today. And I'll give you just an example. Let's talk about ethanol real quick. So we make ethanol to make biodiesel, to mix with gasoline, clean gas. Canada, ethanol. We want to do that. We have ethanol plants. They're great. We've had 1 million man-hours in Manitoba. Not a single accident in 10 years. Incredible facility. United States, and we use corn. And we heat the corn. We use natural gas. Heat the corn, make ethanol, blend it with gas. Canada wants to do that. U.S. subsidizes the corn growers. They let them take the CO2 off the ethanol plants and inject it for enhanced oil recovery. They get a credit for that. So it's subsidized, low price. It comes across the border, it's blended here, and they get another credit. We get one of those 3 credits. It's destroying the economics of our plants. So they get a credit for EOR. We don't get a credit for EOR in Canada. So we're inconsistent. And it's actually crushing something we want to do because of these inconsistent policies, and the carbon policies throughout the world are the same. And we'd say the same thing. If we could trade our carbon credits worldwide, which we can't do right now, and people would respect that market, and there's a liquid market, that would work as well. So we talk about these things, and we try to progress those things, and we're just not there yet.
Quick closing thought from either one of our panelists?
Yeah, just very quickly, again, to use a non-oil example, the problem that you're alluding to and Jeff is alluding to is that we can be best in class in Canada, but still be emitting and still not helping with our Paris agreements. And the problem with the emissions cap isn't the cap. Alberta already has a cap. It's the cut of 38% by 2030, which is beyond what's economically feasible. These are publicly traded companies, and shareholders need to see some return on their investment too. So this is a real problem, and I'll take it outside of oil and gas, is mineral refining and processing, which we know is where China has the real monopoly. They are a huge miner, but in particular, where they are dominant is in the processing and refining of minerals. Those are all very energy-intensive industries, and they do it with coal right now. And Canada's down to a single copper smelter, for example. And most of the smelters and refiners we have in Canada were set up decades ago, even a century ago. And under our Paris Agreement, there's no way we can reshore those very energy-intensive things like smelting and refining, and yet we know that we need it. That right now it's happening in China, it's more GHG intense there, and it's a real security concern. So I think this is where, of course we want to be good citizens and contribute, but there are some, it's not as simple, I think, as meeting your emissions, reduction commitments on Paris Agreement when we're looking at there's trade-offs with other priorities, and we're looking at global emissions too. All of which to say is this is tricky and bumpy, and maybe we need to look back at some times and say, what do we need to be doing differently here to do things like productivity and not just GHG emissions. Hopefully find both.
Gitane, any closing thoughts?
I would just say it's a long answer, but Article 6, carbon border adjustment taxes, there's all kinds of avenues you could use if people are all willing to play fair. And I think, as we heard earlier in all this talk about the US election, I'm not sure we're headed in that direction.
Great. I see our other panelists are starting to come back into the room. I was supposed to sum up a little bit about what we heard, but in the age of the vibe election and 3-word slogans, I've done it as build big stuff, do it right, and do it fast. And so if you'll allow me that perfunctory summary of what was a rich conversation, I really want to thank Heather, Gitane, and Jeff for joining us today. Please give a warm round of applause.